Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to new episode of Markets Tomorrow, the daily market analysis show where we look at what happened in the market, rather today, and how we can better plan for a better trade tomorrow. Okay, so if you're not subscribed, please subscribe and share to your friends and colleagues so that we all benefit. What was the day like? It was a bull trap day, right? It trapped the bulls who went long in the morning when it gapped up, right? And finally, what happened? There was an expiry date today, weekly expiry, and it was a flat expiry. So overall, it's a range bound back. So let's see how it is, what exactly happened, right? So this pre-market analysis would be based on the December 17th Friday. It is meant for that, right? Tomorrow, Friday. And we would look at all of these parameters that you see on the left side, and also in addition we'll have analysis of based on all of the parameters that you see on the right side, right? And we'll have some action also to wrap up with. Look at the candle, bearish, no? Wide range bearish, no? Second bearishness. This is also very wide range bearish. Bank Nifty, right? Nifty, left side, Bank Nifty right side. So wide bearish and still at the gap. Still at the gap support, almost. It breached that, but closed above that. Still at the gap, closed much above that, right? So it's 27 points up actually, Nifty. It managed to close up, but it's red because it gapped up and then closed much below. So it was a bull trap candle that was formed, and it has taken a support, like I said, Bank Nifty 240 points, and it closed a red, unlike Nifty. And it was clear bullishness, and it was bull trap also, right? In intraday, what happened is both of them gapped up, and one of them was range bound in the 100 range for the expiry, and Bank Nifty on the other hand gapped up and then could not sustain it, turned it down till the last hour. This is what happened, right? So gapped up and then turned it down and then attempted to come up. So it was more range bound in this gap. This white space that you see is the gap. So this one gapped up and then trended down till the last hour. Right. So that's the price action. Let's see the support and resistance levels. Resistance can be seen at 17,350 range, right? If that is taken out, you have back to the 17,500, 17,600 range. It's a major resistance which is attempted 2 times and failed. Above that, you have 17,800 and 17,850. This is Nifty. So Nifty downside supports can be seen if the current support of 7,300, 200 is breached. 7,200 is breached means you go to 17,000 back again. After that, you go to 16,900, which is the Fibonacci level, and then after that, you go to 16,700, which is a gap support. Previous swing low also. Look at Bank Nifty support and resistance levels. It has taken a support near to the 36,300 to 600, that band. Closed above that, just above that, right? And if that breaks tomorrow, it goes to 35, 600, 35, 900, that range. And then if that goes, breaks, then it goes to 35,000 kind of level. So the upside, first resistance will be at 36,900 to 37,000 would be the first resistance. Above that you have 37,400. Above that you have 37,800, and after that you have 38,000. That's the resistances and the supports of Bank Nifty. Bollinger Bands, clear volatility contraction is happening. You can see that lower and the upper is coming towards. It's going to be skews. Median resistance can be seen here. Median resistance can be seen here. It is resisting at the median band. That means it's bearish, right? But this volatility contraction could indicate that you are going to have a skews narrow range for the coming weeks or days. You never know that, but that's what Bollinger Bands are indicating. Momentum is sideways again on the Nifty and the Bank Nifty on the short term. Medium term, that's weekly, it's also sideways. Trend indicator ADX is showing that it's a crossover on the Nifty, which has happened earlier. Crossover into the Demat negative is negative, bearish, and the Bank Nifty also today the crossover happened to the bearish ones on the short term. Medium term, anyway, both of them have got trend in the negative, Demat negative dominating. Look at VIX, 7.5% drop, and it is gone back to the 15 range levels. 15.89 closed, and IV implied volatility is 15.68, and then IVP has dropped from the 55 something last week to 42. So it is within the range of 15 and 20. Right now it's dipping, so this chance it can go up and main toward and go upwards also later. But it's a bottom range is what bottom of that range is what it is, the volatility is. But you can see that it was highly volatile, right? Nifty had moved up and down at least 4 times today. Same with BANKNIFTY. Opponent's data. This data may not be a number, may not be relevant. Keep that in mind because it's for December 28th is the next weekly expiry. Today was the expiry 16th. The next is getting actively traded from tomorrow, so it may not be accurate as it used to be on the other days. But Nifty, the data shows that it is having high support at 17,200 and 17,300. Highest is at 7,300, and resistance is at 18,500, very far, and 17,300 after that. So that makes sense. 17,300 makes sense, right? Put call ratio is 0.51, and it was short covering as well. The futures open to start today. BANKNIFTY 36,500 and 37,000 is where the support is, and 37 also is going up, having the highest call rating also. 40,000 is where the highest call rating is after that, which may be hedged. 18,500 and 18,000 and 40,000 you probably make no, because it may be hedged call rating that might be there, right? Otherwise it makes sense. Yeah, so that's what the open interest data is showing. There are some greens today, from the IT sector. Bajaj Finance also recovered around 3%, and Reliance also is back in. So that's the only reason why we did not fall to 17,000 and then maintain the 7,200 level. Sectorally, IT moved up 1% and closed green, but sideways momentum, so nothing can be done. Otherwise, all were red. Metal was red slightly. Auto was 0.5, 0.7, means nearly 1% down. Pharma 1% down, 0.5% FMCG down, reality 1% down. All sectors are down except IT. IT also momentum is in the sideways. The rest all of them are sideways in the momentum in the short term. So we'll have to wait for a decisive entry into any of these industries. Institutional participation data shows that 23,000 of crores of cash selling has happened, and FIs are being continuously selling since last several months. DIs also has been trying to catch up with this and with the buying that is happening continuously. But FI continuous selling is very, we don't know the data of today's data. It will come in a little late, so let us check that. But definitely it will be selling from their side for sure. Institutional selling is a concern. Dollar interest has broken out ahead of the Fed event. Now that the event is over, US market did not react, and the USDI, both the currency pair USDI are traded in NSE as well as the dollar index have cooled off. You can see that momentum is down, prices are down. So probably we may not see that 77. We never know. It may go back to this previous resistance on 75 levels. Crude oil had cooled off and seems to be consolidating near to the 71-70, that range. As long as it doesn't go up, it should be fine. Gold continues to consolidate in the same support zone since long time and does not want to go up or down. Dow Jones was up, so US market, all of them were green yesterday, and even today also it's showing as of now 6:30 p.m. IST. It is showing green even though we had the tapering speed up. That was a decision outcome of the Fed event. The US market did not go down, did not react bad, don't have any impact for some reasons that we don't know. Even Indian market also today managed to close green. Nifty. Other markets are also not showing the impact of the Fed decision. Right. But you'll have to check this market details on the global markets before the pre-market tomorrow. Only then you'll get a picture. Two action bus Boston system seems to be very nicely trending upward since very long time, taking good support every time at the moving average of the Bollinger Band median Seems to be having a momentum support and it's rising up. Volumes are good and trend is also good on the short term. So maybe on a small retracement you may during a new and IT is also doing good. Dollar is also shooting up. So during a retracement it may make sense to ride this. Keeping one candle below the moving average as a stop loss or something like that, right? Bajaj Auto bearish. It's a short trade and it continues to go down. You can see that it is resisting at the moving average band of Bollinger, and also it's resisting in the below the 40 at the band of the lower band of the RSI. So momentum is down, trend is down, price is down, Bollinger band resisting. All this is enough to short further. It can give furthermore. But you have a support here. Maybe whenever there is a support and resistance, you have to be careful. Right? Stop losses has to be tight. So that's a long and a short persistent systems and Bajaj Auto. So not recommendations, but for educational purpose, you can look at that, and if that fits into your risk reward and your capital size, portion sizing, everything, then and after consulting with your financial advisor, you may take the trade. But otherwise it's for educational purpose, right? So just to wrap up, my view is mild bearishness short term for tomorrow. Market view is bearish because mild bearish because of the chart pattern, support resistance levels, the bearish momentum crossover that happened on both Nifty and the BANKNIFTY, the weak trend and all, and along with that the institutional selling also. So there's no other way other than being mildly bearish. Indexes went flat today. Banks are even more bearish after the Fed event. Right? Our banks seems to have reacted more than global banks or global markets, right? But not that ferocious at least, right? So lower low, lower high pattern is continuing with that, or would it break out of that is the only question in front of us. The levels are very clear, and if you keep a close watch at the support and resistance levels of that will help you to play the swing and intraday trades. Only the bands are indicating there is a consolidation ahead rather than a crash, because it's squeezing, the volatility is squeezing, and the squeeze may continue for some days before any upside or downside happens. So coming several days it may be more of consolidation that may happen. VIX has cooled off further today and gone to the lower bottom. Omicron is the only worry apart from the FISL, news wise if you see. So VIX is at the lower end and it can be advantages if you go for the positive levels. Always play safe and volatility is high between 15 and 20, and about 20 stay out. Use hedge positions and tight stops. Right? Keep a watch on this support and the resistance level. Mark them on your charts before you trade. That's a wrap up on my view. I hope it helps you to form your view and a trade plan for tomorrow. If it helps, consider hitting the like button and share with your friends and colleagues. Thanks for watching. Happy trading and happy learning.